So this is US 30 analysis for Tuesday, the 6th of February. Now, let's have a look what I've been pricing, where prices may likely go. So previously we were heading into a bit of a sell-off here, and what I'm going to do is I'm going to clean this chart up a bit. I'm just going to hide the drawings. So previously we had prices, we had a sell-off here, and from the 26,000, there we are. Hopefully this is the scaling is correct here. Previously we saw some selling coming into this market. We broke down beneath the 200 period moving average, had a couple of tests, failed, had the price contraction here with the 200 400 period moving average, broke beneath the 400 period moving average. As we can see, we saw quite a bit of selling into the 2nd of February. Now we've had a brief consolidation before coming into the 5th of February, which was yesterday, and we saw very strong selling in the US 30. I think it was about 1,000 points or so. I think at one point it was down about 1,500, 1,600 points on the day, but we saw a very strong sell side momentum coming to this market. Now, if you watched my video from last week and videos pretty much from last month, I was pretty much looking at the exhaustion candle being developed on the monthly time frame, which was north of 1,200 pips, and I was saying that with an exhaustion candle, what normally happens is the very next month or next couple of months, you normally have either the very next month or the next couple of months, you normally have a move in the opposite direction of equal or greater size. So in the month of January, we had on this chart we have an indicator that's printing MC on any candle which is greater than 1,200 pips. As we can see, in January we had a candle open to close greater than 1,200 pips. So far in February, we have a candle which is clearly greater than even the candle in January, greater than 1,200 pips. We'll see how February closes, but on previous occasions, candles of 1,200 pips, within the next couple of months, we normally pretty much the candle before trading below the low or the high. On this occasion here, bear with me a sec. So this candle in I think it's 2015, had a very greater than 1,200 pips, open to close. As we can see, we traded below above the high within 2 months, essentially, and thus invalidating that move and thus having that 1,200 or so greater pips. And again, of that bullish candle, again we traded below the low of that candle before. We traded below the low of that candle, even though we made a slightly higher high there. We traded below the low of that candle. So if we continue to see this sell side momentum into the rest of February, there might be an opportunity in the opposite direction on the US 30, but it will be difficult to justify it considering the very strong run up we've had. This market was due a pullback, so we'll see how far it does pull back. We might see pullback for a couple of months or so before resuming the uptrend. The reason I say resuming the uptrend is because indices are long biased. So if we zoom out a bit here, we're on a monthly chart, as we can see here, and with indices which makes them a lot different from forex, is there is a clear long bias to this market. As you can see, the market moves up, had a brief pullback. Was it the tech crash in the tech bubble in 2000, had a brief pullback, move upwards. 2008 financial crisis, a pullback. As you can see, all the market does is have brief pullbacks. It doesn't reverse or anything like that. All you do is have a series of pullbacks, especially on the higher time frames, before we have the continued upside momentum. So we've had a move upwards. We have a series of, sometimes we have a double bottom, but all it is a series of higher lows over the long term. So this market, indices in general, tend to be long biased. They are not like currencies, which sometimes range and oscillate around a certain point. indices tend to be over time trend upwards. Now back down to, so that's pretty much what we're looking at. So I had from the previous video, I had a target of 24,711. As you can see here, we've pretty much ran that easily. We traded all the way down to, let's see what our lows of the month of so far have been. Traded as low as 23,755. So we've almost 1,000 pips greater than my target of 24,711. Almost, yeah, almost 1,000 pips greater. Now, my target was met, but so let's just go back to the hourly chart and see where we are now. So we've had that pullback that we were expecting, a lot deeper than I would have expected. A hell of a lot deeper. So where do we expect prices to go from here? Well, there clearly is some sort of catalyst for the market to be moving 1,000 points within a day to the short side. So it's difficult to see, to justify taking a long at present, unless we are going to say the bears are going to possibly take profits and the market will retrace upwards. So let's just have a look at levels identified previously. So previously we had 23,900 and let's just see where that is. This is a lot of the drawings on the charts. Our lows pretty much came down towards that 23,750. I've got a major level marked out here at 23,750, but our lows were at 23,755. So 5 points above the level previously identified, marked out here in red, underlining its importance. So the levels that we would be looking at here, if I just, chart's a bit congested here, just trying to see if I can just bear with me a second here, just trying to get the scaling on here correct. So yeah, here we are. So we came pretty close to this 23,350 before we saw the bullish buy side momentum take us back up. What we have done is we've had a brief pullback, come down towards 23,900 again, the level previous. We saw this bullish buy side momentum come back into the market for a test 24,238. We've had a rejection at 24,338, and we do look poised for downside momentum. So we do look poised for another test of 23,750, from which we're looking for price head down towards our 23,600, and a break from there 2080. Now with this market moving, a 1,000 pips or so, more recently 600 pips, so I think it was on Friday, and 1,000 pips yesterday, we have to look for targets, well, far end of the range being a lot further than we normally do. So if the bears have not had are not exhausted at this point, which would be somewhat surprising, we would be looking for the market to go again below this 23,480, break from which we're looking for 23,350, 23,251, 23,201. I suppose that's a 50 point zone, so it's not really a big zone. But ultimately we would be looking for possibly from this 23,250 all the way down to 23,006. It would be from where we are at present. Currently we are sitting at 23,900. So it would be about a 900 point or so move. Again, after posting a 1,000 point day, I wouldn't anticipate another 1,000 point day. But I would expect the far end of range to be around at 23,000. If we were to trade below it, the very next level that we are looking at is in around 22,742 and 22,581. Wouldn't anticipate those levels coming to focus, possibly the far end of the range, depending on the market volatility, being around that 23,000 mark. Now, if we do see this retracement, if we do find support in around this 23,750, essentially our lows of the day previously was 23,755, 5 points above this previously identified zone. If we do find support here, we are looking to see our prices react around this level that we previously saw a sell-off in around 24,238. If we do see that sell-off if we do see sell-side momentum coming from 1,238, we are looking for price to back down towards that 23,900 or 3,750. If, however, we are able to successfully break above this 24,238, we are looking for prices to head towards 4,420, move beyond which we are looking for prices to head towards 24,509 here, but target 24,550, break from which 24,650, 700. I wouldn't anticipate prices moving much beyond, say, that 24,700, but the levels above that are of interest are in around the 24,864 and then ultimately the 25,000 mark. Wouldn't anticipate that coming into focus, but it's important to identify these levels prior. It's important to identify these levels prior. But from where we are at present, in around this 23,830 or so, let's just see where we are. So it's about 800, yes, about 1,000 points or so. So in around that 24,700, I expect to be the far end of the range. If we do have a pretty strong retracement, and again down towards that 23,000, I'd expect the far end of the range to the downside if we do maintain this selling momentum. I wouldn't anticipate us moving much beyond, say, that 800 point or so mark on the US 30. There does appear to be a clear short, there does appear to be a clear bearish momentum underlying this market at present. We have seen quite a bit of volatility to the downside, although markets pretty much don't move in one direction for too long before we see retracements, pullbacks, before seeing continuation. So might see that pullback before we see that further continuation, might see a lower high. So we've got our highs up there, might see a lower high, a retracement possibly upwards before seeing that sell side momentum come into the market. Now, if we were to use a Fibonacci, for example, and we were to use, I suppose this might be incorrect, but if we were to use a Fibonacci tool, bring this down towards our lows in around that 750 there, we are looking at the 50 Fibonacci sitting at the 24,622 and the 618 Fibonacci sitting at 24,827. If we were to see a retracement up towards that 24,622, which pretty much aligns with the 24,650 level marked out here in blue, but at present we do seem poised for further downside momentum. We are actually seeing at present in real time more sell side momentum coming into this market. So maybe I was a bit conservative with this 23,000 mark, expecting that to be the far end of the range, because while I'm talking to you here, the market has pretty much just moved 100 or so points and to the downside. So there does appear to be a lot of strength on the bearish, from a bearish perspective. But we've pretty much identified all the levels that we are looking at, especially all the way down towards that 22,581, which I wouldn't anticipate will come into focus. And with that said, I think that pretty much wraps up the US 30 analysis. We could have a look at the higher time frame just to see how prices are developing there. So we've had a brief look at the monthly. I'm just going to get a scale on here, and let's just remove the drawings to make the chart a lot cleaner. And as we can see here, we've got a clear bearish engulfing candle. The month hasn't closed yet, so there could still be a lot of retracement. But at present, we have an engulfing candle, indicating the end of this very strong uptrend that we've had for quite some time. This very strong trend we've had for quite some time. So we've got a bearish engulfing candle. We'll see how prices develop from here. And once this candle does close, if it does close bearish, we'll use it as a reference for possibly seeing, projecting for further downside momentum. Let's not identify any levels at present without the markings on the charts. Point, if we continue to trade below the low of the candle, slightly short bias, then say when we start to trade above the low of the candle. On the weekly time frame, let's just have a quick look. Again, our first indicator, bearish candle on the weekly time frame. I think, like we have seen previously for quite some time, because this was possibly the last candle of notable size that was bearish, and that was all the way back in what is that? Is that 2016? I think it was. Let's just have a quick look. That was, yep, that was in 2016. That we saw a comparable candle, which was bearish. Ever since then, we've had a very long bias on this market, and first indicator was there, and here on yesterday we did see a very strong follow through to the short side. And let's just head over to the daily chart. And over on the daily chart, we can see here we've had a bit of a pullback, had a strong candle, and a very strong bearish candle yesterday on the 5th of February. And as we can see, the indicator indicates that this candle on Monday, the 5th of February, is over 1,200 points in open to close. So open to close of that candle is over 1,200 points, over 1,200 points. As it does have an MC printed above it, which is the indicator that indicates a candle size greater than 1,200 points. So again, over 1,200 points. Now we are seeing that sell side momentum already pretty early here in the after hours of the US 30. So again, we'll see if prices head down towards that 200 period moving average here on the daily chart. I suppose it may come into focus. So the 200 period moving average currently sitting at the 22,783 at present. We'll see whether market volatility is sufficient to bring us pretty close to that level, but I don't anticipate us doing that. And with that said, that pretty much wraps up the US 30 analysis. Thanks for watching.